If it weren't happening, why would the BIS reclassify gold as tier one? Why would the central banks buy it the way they did? Why would they repatriate it the way they did? And now you get talk of the new unit currency coming out of the meetings in Russia that are indeed saying, the head of the BRICS New Development Bank said, yes, the new unit settlement currency will use Project M-Bridge to transact local currencies with one another and settle in a basket of 60% currency, 40% gold, the only tier one asset that all these banks are buying. So if you think it's going to be smooth the whole way up, so these banks can quietly accumulate all of this metal, think twice. They don't want us to know what they're doing because we would crowd them out of their trade. So they're going to do all they can to misdirect. I think that's what this is on a big scale. I don't know who's behind it or how deep it goes, but I would say to expect it to be transparent is foolish.
243,054 ounces of gold, worth $571 million, were delivered to BRICS Hong Kong in just 5 weeks. Over the last 75 days, demand on the Shanghai Gold Exchange surged by 200%. What does this mean? According to Andy Schectman, we're on the brink of a massive gold price reset that could overthrow the US economy. Western banks are playing a dangerous game with rehypothecated assets, risking a catastrophic failure to deliver. Countries like India and Saudi Arabia are repatriating their gold, signaling a massive lack of trust in Western vaults. The Shanghai Gold Exchange is now outpacing COMEX in volume, indicating a shift in price-setting power from the West to the East. When China speaks at the gold table, the real price of gold will be revealed, exposing suppressed values and shaking the global financial system. This isn't just about gold, it's about the future of the global economy. Central banks are buying and repatriating gold at unprecedented rates, preparing for a new financial era. The global financial landscape is changing, and those who are aware will be better prepared.
Bars will be bought on COMEX and delivered in China to BRICS Hong Kong, which is a COMEX facility. And when you realize that typically what's traded on COMEX is 100-ounce gold bars, it's interesting they have a mini contract also that uses kilo bars. So 5 weeks ago, 243,054 ounces, divide that by 32.15, you'll get 7,560 kilo bars, or $571 million worth of gold was delivered to BRICS Hong Kong. Why kilo bars? Well, that's what they trade on the Shanghai Gold Exchange. And over the last 75 days or so, we've seen demand increase over 200% on the Shanghai Gold Exchange. When combined with the Shanghai Futures Exchange, it is actually outpacing the volume done on COMEX. It's now the second most active futures market and gold and silver hub, where the Shanghai Gold Exchange is cash and carry. The futures exchange is got futures, but the combined volume surpasses COMEX now. But here again, we just saw the June delivery contract for gold. There was, let me just see, I think it was 3,000. How much left? There were 30,000 contracts in the June delivery contract delivered in gold here just recently, 30,000 at 100 ounces apiece. Was that 3 million ounces delivered? Where'd it go? Who's buying it? So when you talk about what's happening, we are seeing massive accumulation. We are seeing it being done in a less than transparent manner. And the common denominator is removal of counterparty risk. When you see all of these countries, including Saudi Arabia, remove their gold from the New York Fed and the Bank of England, when you see India for the first time since 1991 bring all their gold back from the Bank of England, it's an indictment to the West and the lack of trust, counterparty risk. And this is a big deal. It's every bit as big as the rampant accumulation, because these exchanges were considered pristine. There will come a time, like Bernie Madoff ran a good ship until he didn't. You know, everyone thought it was great to be with Bernie. He started the NASDAQ, so prominent, so prestigious. And then people said, oh, Bernie, I need some money back. Oops, problem. Well, what happens when there's a crack with one of these Western banks that are rehypothecating a gazillion times, where there's, The London Metals Exchange claims they trade 20 million ounces of gold and 292 million ounces of silver per day. But they're admitting that those numbers are 10 times understated. So that's 2.9 billion ounces of silver and 200 million ounces of gold per day. That's all naked, right? So what happens when there's a failure to deliver? That's what the whole idea was behind these banks showing up in Shanghai, begging for help. Who knows what happened there, but it's ironic that the silver stockpiles of Shanghai went straight down from that day that Deutsche Bank was the first of the four banks to show up in second week in March. The inventories are down to their lowest level in years at just around 700 tons. So removal of counterparty risk, massive acquisition, doing so in a less than transparent way. It's exactly what's happening. And there will come a time where there is a delivery failure. And that's at some point when these exchanges become Bernie Madoff and price setting mechanism moves to the part of the world, like the chairman of the Shanghai Gold Exchange said in 2015, that when China's allowed to speak at the gold table, the real price of gold will be determined, or the real price will be revealed. They understand the new BRICS grain exchange. They said, look, we're the ones who produce and accumulate all of these commodities, but the price is set on COMEX. And so whether you're talking about precious metals or base metals, they just bought the LME, the London Metals Exchange, China did. They're playing the long game, and we're not. And we're focused on the wrong things. But what they are doing is using any angle they can in price, in rhetoric. Yeah, we stopped buying for a while. Yeah, nonsense you did. We're just buying it, not telling you about it. And the price drops because that's what the banks want. And maybe they're trying to dig out and fool the managed money into one more time taking those short positions. I don't know. There will be a one last time, but there will come a time when Moscow, when Dubai, when Shanghai, when these exchanges take over for the West and provide real price setting where price discovery becomes real. None of us know what gold and silver really should be because of the Western suppression, which has destroyed the price discovery process for a long time. I believe this in my soul. And it gets frustrating when you see this. I get it. But take a step back. I mean, is the world getting any better? Or are they just, is the world just very, the world is doing all they can to keep everyone from understanding the truth. There's just not enough gold and silver. There's way too much money. And they don't want to let people in on their secret until it's too late. But if it weren't happening, why would the BIS reclassify gold as tier one? Why would the central banks buy it the way they did? Why would they repatriate it the way they did? And now you get talk of the new unit currency coming out of the meetings in Russia that are indeed saying, the head of the BRICS New Development Bank said, yes, the new unit settlement currency will use Project M Bridge to transact local currencies with one another and settle in a basket of 60% currency, 40% gold, the only tier one asset that all these banks are buying. So if you think it's going to be smooth the whole way up, so these banks can quietly accumulate all of this metal, think twice. They don't want us to know what they're doing because we would crowd them out of their trade. So they're going to do all they can to misdirect. I think that's what this is on a big scale. I don't know who's behind it or how deep it goes, but I would say to expect it to be transparent is foolish. I think I've always been pretty consistent on that, saying that if I had one trade to make and only one, it would be gold because it is the only other tier one reserve asset. I know people don't want to hear that. I would still simply say that silver is the most undervalued asset on the planet, and it will do very, very, very well. I don't know if it has the lasting power of gold. See, I think gold will be pegged to a new system, never come back down. It will be pegged. Gold is held in central bank balance sheets in something called the gold revaluation account. They will revalue gold and tie it to a system. We've already been told it will be tied to the new BRICS currency. Silver and gold have a 90% correlation done again through all of history. As one goes, so too does the other. I think silver is the trade of a decade, of a generation, the value, but it won't be easy. And I think if I were being completely candid, when that ratio corrects anywhere into the 40s, I start trading into gold. Doesn't mean I'm not wholly bullish on silver. I am, but I think that there comes risk with it because look, it's not like it's not being accumulated. India's bought 650 million ounces in the last 2.5 years. That's 10 times the registered category or more. On COMEX, the LBMA has 800 million ounces total, of which 500 belong to the ETFs. That's double what they have to play with, 300 million supposedly, if we believe them. But we know that they're trading between 200 million and 2.9 billion ounces of silver per day. So how much is real? Yeah, so I think that silver will do just fine. But if a genie came out of the bottle and said you get 2 trades, it would be buy silver and switch to gold. When the ratio corrects, if they said 1 trade, I would probably buy gold, even realizing that it does not have the value or the potential in any way, shape, or form that silver does. But that's a calculated speculation. What it is, it's a platform that will allow for cross-border trade using local currencies, central bank digital currencies. Saudi Arabia became a full participant on June 5th, according to Reuters, and it's a platform that's been designed years ago. It's not just brand new. It's been a collaboration between China, Hong Kong, United Arab Emirates, and Thailand, I believe, either Thailand or Singapore. But it's a way for countries to look, how do we impose sanctions? Through SWIFT. I've been saying for a while now that I think the gold has replaced, in many of the eyes of the central banks, the treasury market. It's doubled the performance of the 10-year treasury over 25 years, does not have the counterparty risk. This is why you see the buying and the repatriation. And I find it interesting. I'd say the same thing about oil. That big airport in Iran that is being modernized by China for a few $1 billion, they're paying for it in oil. Gold and oil are being remonetized. And the first 2 trades that the Enbridge did last year, test trades, were digital yuan with UAE for gold and oil. And I think that's exactly what will happen. But what basically was said at this meeting in Russia is that all of these countries will trade with their local currencies, so they have autonomy. They don't have to have one common BRICS currency. They'll have their local currencies that they'll have to be diligent about maintaining value, and they'll trade with one another in the local currencies and settle in the common settlement currency.
Now that you're in the loop on how gold and silver are shaking up the global financial system, you won't want to miss what's coming next. Stay ahead of the curve and get ready for the next crucial update. Make sure to hit that subscribe button and turn on notifications so you're always in the know. Thanks for watching, and I'll see you in the next video.